Good morning, guys. Can everyone hear me okay? And do we have a visual on the chart from this morning? Okay, great. Thanks so much. So I think I've got this right, and I've got the drawing tool on it. So fantastic. So let's get started. Obviously, we are looking at ES right now, and we are looking at a gap down. Let me see where that gap down looks like here real quick. We are trading only off 3 actually on ES, which isn't as bad. We came right down to the 1815 to 1817 and change support area last night. So clearly we've broken this just endless day after day of going up, which is good. However, keep in mind on NQ that the breakout on NQ was around the 3620-ish area. And at this point, all we're doing, right, is coming back for a retest of that break. Hold on 1 second here. And guys, give me just 1 second. I need to send. Give me just 1 minute. I need to send my a copy of the file to some clients real quick. Give me just 1 quick sec. That should take care of everything there. And if I missed anyone on the file, Jeff, I have it coming to you right now. Just hit me on Skype here real quick and I'll send it over. So obviously I'm going to review the same thing I review every morning. Why? Because it's an absolute killer time and time again, which is the open drive. The open drive looks like 3 bars up or one very large bar covering 6 or 7 points, right? The first bar will be the low of the day. And I'm going to add something to that so people know. Generally speaking, ES and NQ on an open drive on a day when we're going to trend they will trend together. You will not see NQ going in one direction and ES going in the other direction. It's rare, but when I see that, that gives me reason to pause or to take caution. And so I will always, if I notice that, even if I see what appears to be an open drive in the morning, like we did in ES, and I guess technically it was an open drive, when I don't have NQ confirming, I'm not going to trade it as if it was an open drive. And I'm going to look, it's just a huge hole in that argument. So going forward with that, the tick, the NYC tick, will all be positive and will stay on the positive side for the entire first hour of the day. Okay, and that's both for the upside argument and the downside. 1 solid bar or 1, 2, 3 bars down. Okay, and obviously we're having a gap down today, so certainly the possibility of an open drive lower is possible. The other thing that I want to point out and keep in mind very early in the morning, the 9:30 to 10:30 area is a time where we generally will find responsive buyers. I spoke to several people who had losses, and most of those losses were focused both in the first hour and for those that were trading in the last hour. I generally do not trade the last hour. However, if you look at the chart, the 25-minute rule should have kept you out of a significant loss, number one. Number two, with the last hour, I'm not even going to discuss. I hate the last hour. I'm not even going to try and navigate that. I've shown repeatedly that the last hour can simply go directional, one way. People have this fantasy about catching these huge last hour reversals. They don't make any sense to me. They're high pressure. I don't like them, so I don't deal with them. That's as much as attention as I'll pay to that. And then in the first hour, right? Generally speaking, I gave examples in yesterday's trade review. The rejection or good rejection looks similar to this, where we have a market will move up into a resistance point, right? Maybe 1 or 2 bars, and then it'll come down to give you your 2-point target, right? If you're not getting this kind of action, and we haven't the last couple of days, it's been tough, right? But on the zones that work, they tend to work within 10 or 15 minutes. 25 minutes is a long time to spend in the zone, and if you haven't gotten your 2 points at that point, there's nothing wrong with considering bailing. You can't make any one trade the most important trade of the day, most important trade of the week. You're going to get lots and lots of opportunities. So let's go through what the possible scenarios are today, since we actually are having some kind of downside. I posted some charts this morning, and I'll go over them in a moment. But essentially, this 1830 to 1832 is pretty key, right? Followed by this 1840 area here where we broke down from. So, and you'll notice that I don't have a lot in between, and I have a reason for that, in that we traded fairly quickly through this area. And I just simply think that we have a possibility of getting short squeezed back up. So I simply didn't want to put a zone in between. If I did, we would end up with something every 2 points. And so I'm all right looking for a stretch. If you need an alternative in this hour, you can simply mark the first hour high if it happens to be in this area, and that'll create another zone in here. But I really felt that this particular area was somewhat weak, and I did not want to use it on the chart today. There was a zone right there at 1834.36, but not worth putting onto the chart, at least for me to trade, and therefore I wouldn't put it on there for you to trade. So let's talk about the scenarios. If we open up and we can actually manage a drive up into this 1830, 1832, and we open at this 1822 level, I will take a short in the white zone. As a matter of fact, as long as I can get something over a 5-point rotation in today on the white zone, I will take a short here. My stop obviously will be 1834 on that trade. Depending on how aggressive you want to get, will determine where you want to take that rotation. Also, the size of the rotation is important, right? The larger the rotation you can get, the better chance you have of getting that quick 2-point rejection and being able to bring risk off of the table. So that would basically address an open drive. Now, this is our low, this 1823 to 1825 and a quarter was our low yesterday. We're opening right there. Obviously, in order to have an update, it's going to be critical that we get above Wednesday's low. Should we open and then fall below Wednesday's low, or by the time we get to the open, actually gap down below, the first test will be the low, right? Again, if I don't have a decent rotation here, and what I mean by decent rotation in this particular case is I need a minimum of 6 points rotation from wherever the prior low is, I will not take Wednesday's low as a test as much as I'd like to, right? I need a stretch into this. On Globex low, first time into Globex low, again, it will depend on the stretch. If I open up at 1823, and what I mean by that is not exactly where we open. If we open and we kind of rotate up and then rotate down, wherever that swing high is, that is where I'll measure my rotation from. So if I can get to 1825 and then I roll down to 1818, right, that's a 7-point rotation, I'm willing to take Globex low, okay? Assuming that we're opening right near where we're trading right now, I'll certainly take a trade at initial support. I can tell you right now, you don't even have to ask. I will be long, everybody. I will take a long, and if necessary, a loss at initial support first time in. There's no question in my mind on that one. Moving lower down the chart. Again, there's pretty much no place in all of these areas that I will not take it long first time into the zone, okay? Now, if I identify that we have a trend day down, we open it and we get one of these jobs right here, how do I handle that? Okay, if I get this and this is the case, every counter trade you'll be taking has to be considered extremely aggressive prior to the first hour, okay? So keep that in mind with your risk. How do you balance that risk in terms of your trading ideas and concepts? Hold on 1 second. The way you do that is you simply have to make a decision. If you identify as a trend day down, you can simply go, I'm not going to take a trade in the first hour because I don't want to get blown through a zone, right? And then after the first hour, I'm going to look for a rotation. If we are having a trend day down, right, you may want to stretch your rotations from 6 for entry to 8 points for entry if you're conservative. If you're still aggressive like I am, I'm probably going to be popping them between 6 and 7 points, okay? The rotation's a guideline. It's simply to make sure you have a sufficient stretch so that when the market gets to that point, responsive buyers will be fairly easily able to attain that 2-point rotation back up. Quite simple. That's all it is. I always expect at every zone a pause and hopefully a 2-point rotation, but at the minimum, a pause. Okay, so at initial support, I generally expect to have responsive buyers, meaning I expect buyers to come back in and make a larger than simply a 2-point push, and therefore I tend to leave larger trailers at initial support and initial resistance than I do at other zones. Okay, so let's talk about the trap trade, because the trap trade has been pretty important the last several days. Okay, so the trap trade would work like this. Assuming that we can't clear or stay above Wednesday's low when we fall below, and then we come into Globex lows, or we come into initial support, right? And then we can trade back above Wednesday's low, okay? That would essentially create a trap trade, and where would it push us? It would push us to the other end of the range. Now, in this particular at this particular junction, there's 2 points that you can use as the other end of the range. It can either be Globex high, or it can go back to yesterday's breakdown area, which is in that 1838, 1840 area. I'd be surprised if we got back up there today, but not shocked with the range that we've been having in the market. 20 to 30 points has been the range that we've had trading-wise on the day. So that means right now, right, if we have 1825, and obviously some kind of data just hit the market or some kind of news because we just jumped, but if we're trading 1825 and we tack on 20 points, that puts us at 1845. That puts us back at the old highs. And I said yesterday when we were trading up in this area, you have to constantly be able to imagine the other side of the scenario. Can you imagine us flipping and going to the other end? Now, it would be nice. We're trading at 1828. It'd be really nice if we can get back to that 1845 because it gives that my 1850 calls a really nice shot for tomorrow because as of now, I've written those off as totally worthless. Let's go through this scenario one more time because for whatever reason, we're popping up here. And so let's relook at this scenario now. So we have, so gap fill will be 1825 and a quarter. We're trading 1828.50. So again, that won't be enough of a rotation down to take a responsive trade out of there. And at this point, right, if we open at this 1829 area, there's going to be almost no rotation into the white zone. That makes this extremely aggressive in the white zone if you're going to take this trade. That kind of throws off our trade plan a little bit. I wish we'd open. I'm hoping maybe we'll open back closer to that 1825. But now what becomes critical, right, is that we come back down for a test of Wednesday's low. We trade below it, then into Globex low, and then initial support. If this is the scenario we follow, right, if we get to initial support, the trap trade can both launch from Globex low, right? We failed Globex low, then recapture it. And a trap trade can also launch from Wednesday's low. Let's go look on, okay, and so how do I trade? People are asking me, how do I trade that trap trade? Well, if I see that we're trading at Globex low and we get back over and hold, I'm going to stop fighting the downside trade. Also, for those guys that are scalping on the NQ, that also means that I'll expect the NQ, right, to make some rotation higher with ES if I spot this trap occur, and I'll be less likely to take the scalp setup to the short side until I see some range extension on ES. I hope that makes a little bit of sense there. On the upside, right, let's assume we open at this 1829 level, which will put us in the white zone, and we can get above 1830. Okay, so this is a critical area I think I showed yesterday in terms of holding above. Obviously, it's the white zone. If we get above, I would certainly expect or look for a test of this 1838, 1840 area. If we're unable to attain that, right, and we fall back below, we get below the white zone, the next test becomes Wednesday's low. Again, assuming it hasn't been tested the first time and I can get a 6 or 7 point rotation down, I'm certainly willing to entertain along at this level, and then I'd be willing to entertain along at every level below there, right, first time into the zone. On the upside, same scenario. I'll be looking for responsive sellers. Well, now that we're opening at the white zone, pretty much right here, 1838, 1840. And then at Wednesday's high again. If we get back above this a second time, I'm still leery of taking a short in this area. I realize it rejected really nicely the prior day. It's just would be so easy to push above and pull new cash in off of the sidelines. And this really just looked like maybe a one-day wonder more than a really true correction. We're still in a bull market. Nothing's changed about that. I'd like to actually see consistent downside action. At this point, I've had one day and I'm not going to get overly bearish to the downside. The trap trades, again, right? If we can get above this 1842 and 3/4, right? Let's see how that would look, just like yesterday. If we can get above 1842 and 3/4, 1844, we trade above, and then we trade back below. That would set up the same downside scenario where if you already have a trailer going from this point, right, I would look for a possible retest of the white zone, or even Wednesday's low is a possibility, right? Also, as soon as I see this, as a trader, I'm going to set my eyes to the bottom end of this range to look for longs. I'm just going to stop screwing around with trying to catch reversals in the middle. Again, that refers more to my guys who are day trading, scalping the NQ, right? I know that when we get these trap trades set up, we're very likely to travel to the other end of the range. Right now, it's not an issue, and I would not be surprised, by the way, if we cannot clear this 1832 area right out of the gate. I'm very much expecting a retest of yesterday's lows. So I'll be watching it. Again, that's going to be a tough trade to take for most guys because there's just no rotation into that zone. If I take the white zone, assuming we open where we're opening right now, it'll have to be the very back, meaning 2 ticks in front of the back of the zone, 1831.50, right? And at which point it'll hand me a 2.5 point loss if we bust through here and we come up to attempt to hit this side of the trade. Really, that's quite straightforward. I do not expect balance today. I actually expect, or if it's balanced, it's going to be in a very large range. I do, however, expect responsive buyers from levels lower as long as that occurs prior to the last hour. So this is the pattern I'm looking for. Most likely down, find responsive buyers, then push back up either halfway or all the way back up. This all the way back up has happened multiple times over the last couple of months where we get a down day in the down first hour and we get a reversal. I'll be keen off of looking for these reversals, both short and long, after 9:30 today. We do have econ coming up at 10 o'clock, 9 o'clock Central, 10 Eastern. So be aware of that. It could move the market, and we could end up with chop in between the open and getting to that econ data. One last point that I wanted to go over. Oh, NQ. I wanted to show. Okay. Clearly, we pull NQ in. And again, I do this not because of where's the trade location on this thing, but what's the bigger picture saying for us here. And what the bigger picture is telling me is that this was the breakout point right here. Somewhere in between here and here. Okay, that brings up that 1828 down, 3628 to 3614 area. I would expect a retest of that at some point, would be totally normal and non-shocking whatsoever. So if it just would not be surprising to see us come in here, right? Test somewhere in this area. It's not a specific point that I'm trying to make, but even we could come in, test below, and then come back above and squeeze back up. It would be totally normal to get that situation, just like here where this was the prior high close. Next high close, we came back in and tested, right? We gapped down and then immediately got back above and then proceeded up. So I expect a pattern just like that, where we come down, we find responsive buyers somewhere in this area and launch back up to the upside. In NQ, it is not in a bearish situation, not yet. Markets tend to not crash from highs. They tend to crash from corrections, from the lows of corrections. We're simply not in that situation. And I would assume for now that this 14 to 28 area is going to be the bottom of whatever our new trading range is going to be. I just don't see anything negative out there or negative enough to bring this thing down. If obviously we'll let price action guide our decision making, I just don't want anyone to get too bearish and start pushing your shorts at the bottom of the range and then get crushed. That's the only reason for that note. Let's look at the NQ chart really quick. Okay, on NQ, the key ranges have been 30-point ranges, right? So counter rotations have to have a minimum, at least in this environment that we're experiencing right now, of 15 points. This white zone is critical, and I believe, based on where we're looking at the open, 36.53 and 3/4. This puts us right below the white zone. Again, it's important for us to get above the white zone. I would really like to think we're going to get rejection out of it. If we don't, right, if we clear the white zone right out of the gate, we'll know we have buyers in control. I'd want to see the clearing of that overnight high, right? And the Globex high on this today is trading at 36.60, which is right at the top of the white zone. So two things. First of all, in the AM, if we can get to 36.60, get above it, and then we fail back below, that's a trap. And if we get that trap, I would expect to trade back down to the Globex lows. Wednesday's low is possible, but I'd really expect Globex lows to get tested if this fails this morning, and I suspect that it can. But from those levels, right, if we break Globex lows and we come in here and then we get back above Globex low, I would not be surprised to see us drive all the way back up and even possibly into Wednesday's high. I'm not saying this will happen. I'm saying you have to leave this as a possibility. Why? That keeps you from getting set in your mind that this thing's going to roll over, which is what I'm trying to keep traders from doing by saying all this, is that look for a balanced market more than a straight up or straight down. And don't be surprised if too many people get bearish too quickly. Overcommit on the short side down here and get squeezed all the way back up into either Wednesday's highs, the year-to-date high, or into the white zone by the end of the day would not be shocking. The trap trade to the downside, let's say we reject here, so break below Wednesday's lows and above would set up a trap trade, break below Globex lows and above would set up a trap trade, and also a break below this former breakout area and then a recapturing of that area, right, would also set up a potential trap trade. All of it could shoot us back to the upside. If we break the white zone out of the gate, right, again, what would that be looking like? It would have to be opened by an opening drive, and I'd want to see NQ leading to the upside. If I see ES leading again and NQ is not leading, I'm going to be very leery of taking longs until I see that pattern reverse, right? Or we get very good stretches to the downside, right? Let me clarify. What I'm saying is I'm not going to be overconfident. Let's say somehow I end up with a long ES trailer and I see NQ is not busting new highs and ES is. I'm going to be very likely to get rid of that ES long, is what I'm trying to say. I want to see the leadership out of NQ because that's the way it's been for months and months and months now, and I need to see repeated evidence that that's no longer the case and that ES is actually doing some leading. Clearly, NQ at the end of the day dragged ES down. It took it all day to do it, but it did it, and I will be keeping a very close eye on that. To the downside, the trap trades are, right, if we can get above Wednesday's high or above the year-to-date high, and then we trade back below either one of these, but preferably Wednesday's high, right? If we trade back below, I would expect to trade at least down to the white zone and possibly back to Wednesday's low and or Globex low. That's what the trap trade looks on that side. Again, that's for trailers. And again, the way I set that up, right, if I see us fail and I see that we have a trap trade setting up, let's say that I know that the possibility is that we can come back and test Wednesday's low or Globex lows, but I take a trade out of the white zone. Well, I'm going to be less likely to leave a big trailer out of the white zone knowing that we haven't retested Globex lows yet and we've had a trap trade set up. I'll be much more willing to get rid of this long. And that's how those trap trades figure into how I'm going to balance my day. Really not a whole lot more to that. We'll see where the gap down goes. Again, it's pretty clear at this point. NQ is still down a point from yesterday's close. ES is trading positive, and I want to see NQ take the leadership role. If I don't see that, I'm just not going to buy into ES having a whole lot of upside until that reverses. And again, this could simply be a question of NQ working off a hangover from partying for 10 days in a row, and then it'll just reassert its leadership, and we will move back to the upside. 1850 still isn't out of the question, right? We're trading 1829.50 almost right now. That's only 20 points away, so new highs are certainly possible. By the same token, a test down at that 1805 to 1800 level is also possible, so keep both of those in mind. I want to go through the, actually, what someone called my equivalent of a drawing of a 5-year-old for my charts this morning. I'm glad they liked them. I thought it was quite funny myself. But this is the ES, and the reason that I bring this up is that if you'll look, we've been in this channel forever. This particular area has just been going up and up for days and days and days. We can see what we broke from this area, right? Which was down all the way down here at 1785. And we just launched from there. We've had some corrections, but we've pretty much, if this particular channel right here, between these two, have marked where we've had inflection points. And this one, we had broken down from this point, and then the bottom of this channel really became the top of the new channel. And we've been bouncing in between. We broke from that channel today on a 24-hour basis, which is what this chart is. This 1840-42 area obviously becomes pretty important. I would expect responsive sellers the first time we get up here on a 24-hour basis. All these trend lines show is generally where the market's going quite clearly, right? You could just take a quick look for days and days and see that we're generally in an uptrend, and we've been setting higher highs and higher lows, even on the pullback, right? The pullback was still above the prior swing low. So in that thought process, right? So if 1815 and our prior swing low was just above again 1815, and that's where we're sitting right now. We still really haven't done anything super negative. If we get below 1815 and hold, that story changes a little bit, and we could fall down into this channel moving lower. But at this point, nothing really significant has happened on that front. In the where is the daily? There it is. Okay, on the daily, it's a little bit more clear cut, right? You can see this 1830 became pretty key. We paused and rejected off of it the first time we came in, and we found support there 1, 2, 3 times in a row, right? So I would suspect, which is right where we're opening, this 1830 to 1832, that we would find responsive sellers the first time in. The only problem I have with that, again, is that the issue that I have with it is that there is simply no rotation up off of the open unless we get some kind of swing down first, and then from the swing low we get a good measure. It'll make the white zone higher risk trade, and so therefore I will not be calling it out. If there's less than a 6-point rotation into this white zone from whatever the swing low is after the open, I will not be calling the white zone short out. You'll simply have to decide whether it fits into your trade pattern or not. If we can get above this 1832, as you can see, all the way to 1840, there's not a lot keeping us from testing this backside of the 1840. We could reject at this 1835, 1834, 1836 area. It's possible, but even if we did, I would expect it to be a small rejection and then a continued rotation to retest that 1840, which is the breakdown point from yesterday. And if we can look, or if you'll go through your charts, you'll see constantly point of breakdown, right? And then we come up, retest, and then continue lower. Also, if you look at it from this point, if this is an A leg, right, down to 1825, then from wherever we open, and the way that we would measure it would be like this. Wait, just giant so we can see it easily. So if this is the case, well, here, I'll fix this. Let's assume that 1830 would be the that 1830 is going to be our high, 1830 to 1832, somewhere in this ballpark, right? This morning, then that would put our AB equals CD move all the way down into the 1810 area. And then, of course, the question would become, do we have a zone there that we can trade off of? That would put us down into approximately initial support. 1812 and 3/4 to 1810 and 3/4, maybe a hair lower, but that's approximately where I look for responsive buyers, right? Now, how do I figure out if that ABCD, if it's going to play out, right, as my eventual target? What else? What else could that look like? Possibly, it could look like if we move up to, let's say, we test that 1840, and we get an ABCD. Well, then that puts us down to this 1820, 1818 area. Okay, so the way that I figure it out is I simply look for where's the swing high, and then I visualize, okay, where can it potentially roll lower? Again, all of this doesn't do any significant damage to the market. Obviously, below 1815 is a little concerning based on the other chart, but really no significant damage occurs to the downside from either one of these scenarios. And it also, right, I'm going to keep my eye here because I would expect to find responsive buyers off of this move down. Give me just one sec. I'll have one more thing I want to point out here, and that is on the volume profile. Okay, two things I want to point out here. First of all, when I look at this, and I look at the prior trading range, we're at the top, where was the bottom? This area right here was the bottom of the current range that we are currently in. Wow, this chart is just not working the way I want it to do. Okay, so again, where does that put us? 1808 to 1816 area, right? Which again would put us in both those targets regardless of where we find a reaction down. Would not be surprising to see us come back, right? We found resistance here the first time in. They tried to reject off of. They failed. They broke above. In order to get any sustained downside move, we're going to have to get below this area and into this old trading range. If we get into the old trading range, that puts us down into the 1760 area. I'm not saying that the market can't roll to the downside. I'm just saying these are the hurdles that it's going to have to pass before it gets there, and you have to suspect that buyers will be responsive when we get into these areas. So this is the area I'm looking. I will be hesitant to press my shorts too hard into this. If I get a short, I will be taking it for 2 points and be gone from here. I'm not interested in trying to bet that the support will break. That's usually a losing bet. And I want to be very focused on staying calm and just focused on my plan. Looking at the 24-hour for where potential areas of resistance and support are on ES. Okay, when I look at this, so clearly we have this area right here, this 1810 area. Highlight it. Right here, 1812, all the way through this, which was basically 1808 area. I would expect to find A, for it to slow down in this area, and B, to really find responsive buyers in this area for a push back up. On the upside, this 1835 area, 1836, right? Even though I don't have a zone here, it could be an area of rejection. Again, I didn't want to have a zone here at 1832, and then another one right there at 1835, 1834, 1836. I wanted to give it some room to move. And also we have a poorly auctioned area right up into this 1840 area. So I still think this 1840 would be a good area to reject out of. Not absolutely certain that it'll get there, but certainly 1838 is a possibility. The reason I'm pointing this out is it was a potential zone. I purposely did not put it in because I don't want to have a zone here and then 2 points lower have a zone right here. And that 1830, 1832 trumped the 1834, 1836 area, in my opinion. And then there was 1838, 1840, and just simply this zone did not have as much weight as the one above and the one below. So that's how that zone disappeared off the chart. Let's see if there's anything else that this tells us. There's no open gaps here, and the nearest open gap, by the way, on ES, and both on and Q, I want to point that out as well. ES daily. All the way down here, right, at about 1770 area is the nearest open gap that we have. Everything else outside of yesterday's open gap at 1825, which is obviously on the chart anyway, everything else has already been, all those gaps have been closed, and those usually provide the absolute strongest points of rejection, or an easy place to target for rejection. All of that has been closed. All of it's been closed on the upside as well. Really, all that's left is to come back and close this one too. And the market certainly could come back, right? Close it and then move back up. That's a big picture. It's not going to happen today, or if it does, I'll be jaw dropped. Could happen today, but I don't think it will. On NQ, and then I'm going to jump off. The only open gap that I see, there's one tiny one right here. So approximately 35.55, and then there's another one right here, just below 3,500. Obviously, we closed at 36.54, so a 60-point rotation, right? When put this one is potentially reachable today, right? We could get stretched down low enough to get it. If we do, I can promise you I'll be a responsive buyer. We're gonna have to get super ugly to get anything like this today. There's a couple hurdles getting us there, right? Which is, first of all, we're gonna have to fail the prior break, and even if we get this, right, if we do get down here, this would actually make a pretty nice target on the upside, assuming we don't reject out of here to begin with. I don't think we're going to get this today, but I'm wrong all the time. I'm going to let the market dictate. Let me see if anyone has any questions. Oh, Hap, great to hear that. Tell David I said thank you. And whoever me is, so me, opening drive. Opening drive, I will cover that very quickly. Me had asked, could you tell us what you define as an opening drive? I can't. It is defined by usually 2 to 3 strong up candles, with the first candle being the swing low or the day low, actually, right? And that's in either direction, right? If it's down, it looks like this, with the first candle again being the high and not being violated. It doesn't have to be this way, but this is a big giveaway. Number 2, the tick will stay predominantly positive or predominantly negative through the first hour. That's the NYSC tick. It's the symbol $TICK. At least that's what it is on TradeStation. And then the other characterization that's very easy to pick out, counter rotations will be incredibly small, usually less than 2 points. This can also be, these bars can also be substituted for one very large bar up or one very large bar down, either way, as opposed to 3 bars. But that pretty much that would pretty much cover what an open drive looks like. The last piece that I'll add, because I didn't have the occasion to add it before yesterday, usually when you have an open drive, NQ and ES drive together. One doesn't go south and the other one go north at the same time. And if it does, I'm hands off until they get aligned. It's rare that NQ will go straight up and ES will go straight down, and vice versa. And on opening drives and on trend days, they should be trading pretty much in lockstep. One more minute. Does anyone have a quick question I can answer? Because otherwise I'm going to jump off and get ready for my day. Oh, one thing I do want to stress while that question's coming in. Incredibly important. My traders that I coach, the ones that do the best, focus their trades prior to 11 a.m. Central Time. They focus on getting 1 to 2 trades a day, and they're done. You can't capture every trade there is. There are times when the zones, well, every single trade will be perfect, but there's other times when that's not the case, and it will wipe out your profits from the morning by trading in the afternoon. I do reduce my trading size in the afternoon to compensate for the added risk if I do trade, and I generally on most days would prefer to be wrapped up by 11 a.m. myself, get my money and run, and turn my attention to other matters. Sometimes I'm forced to trade in the afternoon because the opportunities are just too good, but I'd rather not. Anyways, I hope everyone has a great day. I hope I'm trying to simplify it a little bit. I hope we worked our way towards doing that, and hopefully we have a great day. If you have any questions, you can hit me on email, tradingperform@gmail.com. You can hit me on Skype, or you can hit me on Twitter, and I'll update as I can. Talk to you later, guys.